Good afternoon, everybody. Today I'm chatting with Joe Kelly from Uranium Markets. Lately, when we've been doing content on uranium, it seems like the audience just can't get enough of it. So we thought we'd reach out to Joe, who we've had on the show before, and ask him some questions about what he's seen in the uranium market. Now, Joe has a very unique perspective because he is a broker in the uranium markets, so he deals with both buyers and sellers. As you can imagine, it's not that long ago that all of the sellers of uranium were very depressed after around 10 years of the price of uranium sitting in the mid $20 range, to today, the buyers generally being pretty depressed as uranium's up nearly 500% over the last couple of years to over $100 per pound. In this interview, I ask Joe what he's seen in the market, how the utility companies feel about the Sprott Physical Uranium Trust. We get into the countries that Joe thinks he's going to be able to buy some production from over the near term. And lastly, we get into the market dynamics between buyers and sellers after such a wild run. All right, everybody, enjoy the interview. Joe, thanks so much for joining us today.
Steve, thanks for having me on. I'm very happy to be here.
So uranium it's going through a bit of a renaissance, and I'm so happy for many of the management teams and investors who stuck it out, because it felt like for a 10-year period there, it was dead money. And I'm sure that the people who, I know your business is a little bit different, but it's still probably good times for you, I imagine. But many of them, they stuck it out, and there was probably some pretty dark days, we'll say, especially in our world, where we're primarily talking to people who work on the equity side of uranium, and they need higher prices in order for the whole thing to work. So you've been in the uranium business for how long?
About 15 years now.
15 years. So you've kind of seen this whole cycle. What are you seeing right now in the uranium market?
Well, it's fun you mentioned the Renaissance. Now, back in 2007, we also had what was called the nuclear Renaissance. But it didn't work out very well. We had a couple of issues kick in. We had the financial meltdown of 2008. We had Fukushima of 2011. So our old Renaissance really didn't come about. It kind of turned a little sour. So we had a long time of a lack of prosperity. And to now reuse the word Renaissance, we thought about reusing, and I know you just used it now, but we thought about, should we use that again? We have yet to come up with a name of our euphoric time in nuclear right now. We're kind of nervous about using Renaissance. We think it might jinx us a little bit.
It's funny. I was at the Vancouver Resource Investment Conference last week, and one of the guys I sat down with is putting together a uranium deal, and pretty experienced investor. So I'm not trying to discredit what he said, but I made a comment to him that in the uranium world, you don't know, like we've seen a 500% jump here in prices from $20 to $100. And in terms of the equities, we could see a bit of a pullback here to $60, which is still, a 300% X. And this one guy I spoke with isn't the only person who had this reaction, but they seem dead set that it wasn't possible. Whenever I make comments like that to people, I'm told, maybe $90, but we're definitely not going below $90. So you're a broker in the uranium world. I imagine there's only a handful of you. What do you come up with any forecasts or any ideas of just how much or how robust the demand is relative to the supply? And do you think we could see a 40 to 50% pullback?
Well, I do like your comment about other people's comments. And that's what we try to gather as the middleman. We sit in the middle of deals. Our clients are both the nuclear reactors, the utilities, and the mining companies. And strangely enough, you'd be maybe shocked, maybe you wouldn't be, but all the mining companies think it's going to go to $500 a pound. And they keep telling a wonderful bull tale. I say that in jest because as a mining company, they benefit from the higher prices. Now, half of our client base are the utilities. So the utilities, of course, are not as happy about the higher prices as the mining companies are. So we live in the middle. We match up buyers and sellers. So we have half of our conversations are with buyers, half of our conversation with sellers. The consumers, the utilities are not happy about these higher prices. So we have to sort of make sure that they feel good about themselves and try to talk them off the ledge a little bit as things go higher. When we talk to our production side, our mining companies, well, they're over the moon about how happy they are with things. But we try to tell the consumer that it's kind of good and robust for the industry to have higher prices to bring on more supply. And with these higher prices, a lot of the projects, some of this you just made reference to that sector of the business. A lot of these projects are now finding it profitable for them to mine uranium. So that'll be more supply coming to the market. So that's a good thing. So in the middle here, we try not to forecast. What we try to do is tell everyone what equilibrium is. Right now, we had a deal earlier today at $102 a pound. We can now have more pounds for sale at $102, and we have buyers at about $100. They seem to be holding the line at 100, keeping it a little in the triple digits because that's good for the production side. But the utilities are kind of pulling back as you have declining prices, and they would like below 100. So in the middle we sit. We hear both sides of the story, so we can tell the true tale of what exists. People say, what's the uranium price going to be, we'll say at the end of the year, of 2024, say in December. Well, I just look at our forward curve, and let me ask the trading floor here, what does our forward curve say for 2024? What do we put out on a run this morning? I've got to think it's December 2024 is probably 103.50, 106.
105, 108.50.
105, 108.50 was this morning's forward curve. So if you want a projection coming from actual supply and demand, from those that speak to the buyers and the consumers and those that speak to the sellers, we just use our forward curve, and that's how we predict the future, because that's where equilibrium lies. If somebody was really, really believing that uranium is going to $200 a pound, and they're telling you that's the case, and they're swearing that's the case, well, why don't they buy my $102 offer if they believe it's going to 200? So where we live lies supply, where supply meets demand, and that's the price presently.
So we've seen this tremendous, we could say, volatility going from 20 to 100 over the last 2 years. It kind of worked its way up there. How has the spot market versus the contract market changed from your view since we've seen this increase in price?
Well, it's certainly people are holding off on striking contracts using base escalation from the current spot price because they're hoping it's a short-term anomaly that's creating this event. Now, you know, or maybe you don't know, but utilities buy the uranium they need pretty far in advance. So they've got time to wait. And when they see what they might decide is an anomaly, the price is going way higher, well, they might take a breath and wait a little bit until, well, they need to buy. Or maybe they'll just buy a portion of what they need, say in 2025 or 2026, and sort of hedge the risk they have by being exposed. So right now, we're not seeing tremendous panicked demand, even though prices have gone way up from about, I think the last time you guys were nice enough to have me on your show, it was trading about $30 a pound. And now we're $102 a pound as of today. So that's a major increase. So are all the shortfalls, which you mentioned earlier in the conversation, priced into $102 a pound? Well, you know, it's hard to say, but that's where equilibrium lies right now. So projecting on whether the enough uranium is going to come into the market based on new supply with these mining companies that now find profitability at $102 a pound. Well, there's no control on these projects that will come to market. They all see the opportunity to make money mining uranium sub $102 a pound, and now they might come to the market in intervals. They might come right away. They might come a year from now, might come 2 years from now, but there's no coordination on when they come. They all now want to come and sell into this prosperous or high-priced market. So it's hard to tell really what supply will come on, but certainly we do understand the demand. And the demand is pretty consistent. It's growing, but the growth in demand is a long-term structure because to build a nuclear power plant, it's a $10 to $12 billion commitment, and it's a 10-year process to build a plant. So new demand will be decided now and only will come on 10 years from now, where supply probably it's 2 to 3 years will come on. So we can get our supply on quicker than we can get our further demand on. So it's really hard to project where the market's going. You'll hear lots of stories about where they think it's going, but as long as the production side continues to see the ability to create profit with the current spot price, well, then they'll come on the market. Now, as far as you asked about forward contracting, As I mentioned, they're slowing their decision to forward contract. What a lot of forward contracts are doing right now, the ones that are coming to market, they're leaving it market related, which means they're priced off a future settlement where they might take our end of day price and use that to settle a contract, say 2 years from now, whatever our end of day price is, with a cap on the price and a floor on the price. So it doesn't go too low, so the production can lock into their profit and the consumption doesn't have open exposure on the way up. So they're getting creative on how to structure these contracts, where in the past, when the prices were significantly lower, a lot of long-term contracts were based on fixed price using spot as the escalation.
I'm curious because you're talking with a lot of the utility companies and the buy side of the uranium market. What's the general sentiment from the buy side of the Sprott Uranium Physical Trust? Is there skepticism of how big of an impact that it can have? Is there anger that it feels like there's a little bit of manipulation happening to the market? What's the sentiment that you're getting when you talk to your buy side people about the Sprott Physical Trust?
Well, it's a great question because I tried to explain to them that when we had uranium in the mid 20s, it was very hard for the producers of uranium to make money at $20 or 20 something dollars a pound. So the utilities are still going to shop and be, well, back then or most times, uranium's a buyer's market. So they would dictate and name their price, and you'd hear tales and stories of these utilities buying uranium $1 to $2, depending on their buying power, under market price. So they had no real motivation or interest to make sure they shored up the supply. So they just entered the market and got whatever best deal they could, which is basically their fiduciary responsibility, is to make sure they bought well. So now that the price is going up, we try to explain to them, even if it is an outside entity like Sprott, which is representing the investor's interest, because basically Sprott is just a vehicle for investors to buy an equity, an ETF, and actually own physical uranium or a simulated physical uranium. So what that did is I tried to explain to the utilities, we need higher pricing because we have a supply-demand imbalance. And with such an imbalance, you or the consumer could not buy up the price high enough to make it worth these new producers to come on because of this imbalance. The imbalance could be explained as Fukushima, with multiple reactors being shut down in Japan, with national reserves coming to market, whether it be U.S. government, DOE selling material. So all this material has been coming to market for years and creating this glut and not giving the opportunity for production to come on and match the demand-supply mismatch. So now that Sprott came in and decided to raise prices by consuming, what do they have, about 63 million pounds of uranium under their portfolio at this point? Well, they took that 63 million pounds off the market, driving the price up to the point where more supply can come on now. I guess the utilities, the consumer, is not happy with the fact that they didn't benefit from that price increase at all or buy any of the cheap material. The outside investor did. Well, they could have come to market and bought extra supply, but they let the investors adjust the price so that way supply would come to market and match the disequilibrium. So that's the story. I try to tell them that Sprott, as much as you might say they're eating your lunch by getting the cheap uranium and putting it into a trust, into an exchange traded funds, but they helped the supply come on the market. And you guys had every opportunity to do that, but they passed on their opportunity. So they understand that some vehicle had to come to market and do that, and that's in it. So supply will be coming to market based on Sprott. So they really performed a service in the market. I guess some of the discussions from the utility side is, why isn't there a vehicle within Sprott to use some of that 63 million pounds to alleviate a shortage issue in the marketplace? They don't have a mechanism in place to sell uranium at this point, or a desire to do so. There was some talk about creating some preferred shares that could be converted into pounds, but I believe that discussion fell apart.
How closely are you following where the next production might come out of in terms of the different mining sites? So we can talk about different countries or different mining companies. Is that something that you keep close tabs on, so you have relationships so that you can hopefully broker some deals between that producer and the buyer? Or is it just something that when it pops up, that's kind of when you'll get actively involved?
No, we stay in touch with them. We have a conference at least once a quarter, someplace on the planet. Everybody on the production side, the consumption side, all kind of comes together, and we talk business, and we do some business and listen to some presentations and some papers, but we also do socializing, get to know each other. So during the last after Fukushima, you referred to that as sort of the quiet time in the industry, the non-Renaissance time, or the lack of a better word. We haven't coined a phrase yet to describe our new Renaissance. We had a lot of producers or potential producers, junior miners, that were kind of really unhappy. They understand they're dragging their project out a little longer because at $30 or $25 a pound, they couldn't make any money because they're producing at uranium at $40 or $50 a pound. But they showed up at every conference. They were always there. We're in touch with them. We communicate with them. We understand their depression over the years of trying to keep a business opened, going to the capital markets to have the capital markets invest in their business. So someday in the future, they can create or generate or sell uranium at a profit so they can be a profitable company. It was a long run for those guys. But all the way along, we kept in touch with them, and we still keep in touch with them. It's an easy phone call now because they're all very happy, where over the past decade, they were sad. And they hung in there. The ones that did hang in there, they deserve all the credit, and they deserve their opportunity to actually make some money now. So we're happy for them. We're in touch with them. We speak to, here at Uranium Markets, we speak to anyone who is a utility or could buy uranium, even as an investor or as a trader, or any potential mine sometime in the future or present. We speak to 100% of them on a regular basis.
I'm going to try to get you put your neck on the line a little bit here, but from what you're following, is where do you think we're going to see new production come out of over the next, say, 12 to 24 months?
Well, I mean, we look closely at U.S. domestic production, and we're often embarrassed that we can't even. We're somewhere around 5 to 10% of our annual consumption do we produce locally, domestically, and that's kind of embarrassing for an industry. So we know they're looking locally. I know there's expansion in Canada. Kazakhs are digging as deep as they can dig to get more uranium to bring to market. Australia is a really good player and a constant supplier of uranium. They've got wonderful projects over there. Africa, various nations in Africa have a plethora of opportunities to bring stuff to market. Uzbeks have been continuously supplying material into the market. So there's a lot of places all over the world that are certainly interested, and projects that have been clearly defined and structured, and they have the opportunity to a close proximity to mills, easy access to a Class 7 freight ports, so that way they can transport the material safely and clearly licensed to do so. So there's a lot of projects for various reasons and places all over the world that are very excited right now because their business is a real business now. The investors in that side, they're very happy because they went a long way, and they're finally reaching the point where they're going to start seeing some money. The early money kind of went into the developing mines. They ran up quickly, probably what my thought to be too quickly. And it turns out that as they lag a bit, some of the information that's flying around the market now is based on saying that these new miners, these new producers of uranium, should be trading at a greater premium. Well, I think they went up rather quickly because it's hard to invest in what you called, or we used to call, the nuclear renaissance, and haven't coined the new phrase for it yet. Maybe we could do it on the show, Steve. Maybe you come up with a word. Maybe you'd be the one responsible for calling the new renaissance, whatever name we're going to come up with. But bottom line is that they're all excited about it. We don't know the timing when they're going to come out, but it's a global effort.
So since the last time we spoke, which was, I believe, a couple of years ago, Russia walked into Ukraine, and we can call that a conflict. I don't know what words you want to use to describe it, but that obviously has had some impact with Russia having issues with the Western world. How has the Russia-Ukraine situation impacted the uranium market?
Well, it's complicated. As I mentioned, we get together once a quarter with everybody, at least once a quarter with everybody in the industry, including the Russians. And prior to them invading Ukraine, the Russians, I mean, now as well, and prior to them, well, they became our friends because we do business with them. We spent time with them at various conferences. We got to enjoy a little explanation of their culture, and it's a wonderful industry because it's global, and people are from all over the world. We love to share our culture and share our experiences, and that's why our conferences are all over the world, so we can get a chance to do that. So basically, as people, as individuals, the Russians, which we've dealt with for years, well, they're our friends as people, and it wasn't the uranium seller or the uranium buyer or any of the fuel services guys that actually created the problem, the invasion, the conflict, or whatever you want to refer to it as. But the ramifications of the government will be the recipient of some of the proceeds of their sales. It bothers a lot of the consumers. So it's affecting a lot of folks because of the uncertainty of supply. And that is the first priority of a procurement agent in a nuclear power plant, is to make sure they have security of supply, because the actual cost of the fuel is a minimal cost compared to the cost, well, in generating electricity, compared to the cost of the fixed structure of the nuclear power plant. So their job is really to secure supply. And Russia imports into the United States about 22% of our EUP, our enriched uranium product. So therefore, having that interruption is concerning. It's driven up the SWU prices, the separative work unit, the energy necessary in order to enrich uranium. And it's also driven conversion up through the roof, because now there's also created a shortage of conversion. So with all that going on, there's been some legislation about whether we should be boycotting the Russian supply or the delivery to the United States. Because of the personal relationship that a lot of the utilities have with the Russians they've done deals with, they don't want to renege on the deal with their friend, but they politically don't want to. A lot of them don't want to be supplying money to Russia as they perform what they perform. So what you're finding is they're hoping the U.S. does create a sanction, a boycott of Russian material. But what the U.S. is saying is they're giving us a waiver where if you can't find that enriched uranium product elsewhere, the substitute then you could get a waiver from the government, U.S. government, which will give you the opportunity to buy the EUP from the Russians. But I'm not sure a lot of utilities want that. They didn't want to renege on their friend, but they also, if the government's telling them they can renege, it's not a renege. It's basically mandated by the government. But the government gave it out to make sure they have continued surety supply. So it's a morphing situation. The Congress passed this boycott with the waiver opportunity some weeks ago. Now we're waiting for the Senate to get a hold of it and make a decision. So it has certainly changed things to the point where you have instability of supply, which will of course always drive prices up. So prices driven up based on that as well.
By the way, the name that I'm coming up with for the new
I knew you were
Renaissance,
thinking about it. I saw your gears turning.
how do you feel about atomic revival?
Atomic. I'm going to write that one down. Atomic revival. I'm going to try to get that one out there, Steve. If that one catches
let's
on,
make it happen.
Right now, we're going through the atomic revival. We have a minor setback. And let me tell you about the setback, too. That's a good topic. If you want to ask me the question about the minor setback, I can answer that one. Do you have that question of me?
So what is the minor setback to the atomic revival?
Well, the atomic revival started around $30-something a pound price-wise. And the euphoric approach, the atomic revival, basically in Dubai, they had the climate summit, and the results of the climate summit was they want 3x generation from nuclear. So they want us to be threefold what we are today. So that's fueling the atomic revival. Right now, we've seen prices go from $30-something a pound to when as high as $106 a pound. We're coming off a little bit because if you ever look back at a chart and you have a bull market, it's not one directional. It's not like this. It comes down a little bit because sometimes it gets ahead of himself. But during our atomic revival right now, we're probably momentarily going through a little price adjustment because we might have moved a little too quickly. But I think this atomic revival will be long-term and will catch on tremendously.
All right, well, Joe, thanks so much for hopping on today. If our audience wanted to hear more of your commentary or see more of your content that's out there, where could they go to?
Well, what we have, we don't have a public forum that we provide this information. Occasionally, I enjoy talking on the shows with you guys to give a little taste of what we do. The information that you were privy to at this point is basically we give it to our clients who are interested in buying or selling uranium or able to buy and sell uranium. So basically, you can call me, Joe Kelly, at 203-536-0025. And I'm always here. I just sit here, talk uranium all day long with everyone on the planet. So that's the way to get in touch with me, to talk uranium. We don't publish we have a price sheet, which we put out every morning, which gives us our present spot price and the forward curve. It gives us conversion prices, swoop prices, EUP prices, location swaps, and various other things that take place in the fuel cycle. But the information that I shared with you briefly is really for people who buy and sell uranium in our little world. So the best way to get in touch with me is by phone.
Well, Joe, thanks so much for hopping on here, and please come back on again in the future as things continue to play out, because there's a tremendous demand from our audience for more uranium content. So we appreciate having somebody on here who gets to see it from both sides of the uranium market and not just from the investor sentiment side.
And Steve, from me and possibly the rest of the uranium market, and certainly Uranium Markets, the company, we might be forever in debt to you with coming up with the Atomic Revival as our new battle cry for our prosperity in our industry. So I might be returning back shortly with such thank yous. And I'll see if it catches on. You'll be the first I'll let know.
Thanks so much, Joe.
Thanks, Steve. Good talking to you. See ya.
All right, everyone. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.